Hi, this is Paul Carlson, CPA with AE Velocity. In this video, we're going to look at the difference between total revenue and net revenue. Just going to walk through a couple examples to kind of explain the concept. So first chart is we're looking for a firm with 6 months of revenue. And in this chart, we're looking at total revenue. So this is the total amount of revenue that the firm earned over these months. So total revenue is components of how much we earned from professional services, the amounts the firm earned in revenue from reimbursed job costs, and then revenue from reimbursed subcontractor costs. So from this chart, it looks like the firm is doing tremendous, that we have consistent revenue growth in each month. But looking at total revenue alone can be a very misleading number. So let's pop over to another chart. And so here we have total revenue numbers that we saw on the prior chart. And so this is the top line on the chart, a little different scale, so it's not quite the aggressive growth as we saw on the other. And from that, we're going to back out the cost of expenses that were included in revenue, and we're going to back out the subcontractor costs that were included in revenue. And when you back out expenses and subcontractors, the revenue that's left is net revenue, or the revenue that was generated from internal professional services. And when we look at this chart, we see that revenue is decreasing. So now we have two conflicting stories from looking at two different revenue numbers. In this firm, if we looked at just total revenue, we'd be giving bonuses. When we're looking at net revenue, well, we're starting to think about maybe having to lay someone off, or we need to really get serious on sales to get revenue back up. So let's open up a little more detail so we can see a little more of the story of what's happening here. This is a simplistic example, so it's simple to see the story once we look at these additional details. In real companies, it's not this simple, that we still need to look at net revenue. We just can't cheat and look at services revenue. So let's look at these examples. So services revenue is decreasing every month. So utilization is decreasing. We're out of work. We have people who are idle, or the new projects that we've picked up have lower billing rates. So we're working the same number of hours, but the revenue for that time is decreasing. Reimbursed expense revenue is consistent across periods, and reimbursed subcontractors is increasing significantly over time. So we can explain this by we must have picked up a new contract, and that contract has scaling subcontractors and significant subcontractor costs every month. Now what's happening is services revenue, or the fees earned by the firm's internal services, are decreasing. We're off 25%, which is a very significant drop. But that is being masked in total revenue by looking by the additional reimbursed subcontractor costs. That these increases are hiding services revenue when we look at total revenue. Although once we back those numbers out and we look at net revenue, that then we can clearly see the trend of what's happening within the firm. So when we work with firms and we're the controller, CFO for the company, that we largely look at net revenue, that we don't pay much attention to total revenue because it is such a mixed signal. For the firm owners, when you're talking with your buddies or you're trying to brag up numbers to the bank, go ahead and give them your total revenue number. When we're talking, I'm going to be looking at that monthly net revenue number. Let's go over and look at one other example of why net revenue is the critical number to watch. So here we have June, and then we have July. I'm just going to show the difference between what happens when you look at profit percentages, when you look at total revenue versus net revenue. So the difference between June and July is June is all professional services, and we have $50,000 worth of net income. In July, we add $200,000 of subcontractor revenue and $20,000 of reimbursed expense revenue, which brings total revenue up to $420,000. Back those numbers out, and so net revenue is the same across both months. So if we look at total revenue profit margin, which is net income divided by total revenue, that signal tells us that net profit decreased in July. That this is making us think that something's wrong with the firm. We need to go in and dig into what's wrong with net income. When realistically what has happened is we had additional subs which pushed up total revenue and skewed our number. When we look at net revenue profit number or net revenue profit percentage, that we're just looking at the net revenue number, which is insulated from the swings in consultants and costs. And so we have the same number across both months. And so here the difference between the 2 months is the same, that we earned the same profit on the same net revenue across each month. So again, we focus on net revenue numbers and net revenue profit percentage. And with that, it's a quick introduction to the importance of watching the firm's net revenue number closely. And if you need any help with accounting for your A&E firm, please give us a shout at AE Velocity. Thanks. Bye-bye.